Hello, and welcome to the April 2024 Real Estate Market Update brought to you by the Reby Homes team. To start things off, let's take a look at what's going on nationally. Some positive news for inventory. In 45 out of 50 of the largest metro areas, there's been a substantial year-over-year increase in active listings. The national average increase is 23.5% since March of last year, and for the first 3 months of 2024, active listings are the highest point since 2020. So although this is great news for those actively looking right now, it's important to note that inventory is still roughly 38% below where we were pre-pandemic. So we're on the right track, but still have a ways to go. Moving on to one of the larger topics surrounding the real estate world, mortgage rates and the volatility of the market. Although the Federal Reserve has influence on mortgage rates, it doesn't set them. Mortgage rates are influenced by several economic factors, including unemployment, inflation, the bond market, and other factors that affect the economy. So what does this mean for the near future of mortgage rates? Well, the Federal Reserve is still keeping a close eye on all of those economic factors, and they stated at their March 20th meeting that when considering adjustments to the federal funds rate, they'll keep an eye on that economic data, but ultimately feel it wouldn't be appropriate to lower the rate until their confidence in reaching the targeted 2% inflation rate strengthens. So long story short, keep your expectations low for rate cuts in the near future, but remain hopeful for the latter half of the year. On a more positive note, affordability for housing is at a historical low. When it comes to housing affordability, there are three main factors to consider: wages, mortgage rates, and home prices. Wages are climbing at a faster pace than the historical average. Mortgage rates, although stagnant for the time being, are in a downward environment, and home price appreciation has significantly slowed from the 15 to 20% increase to a 3 to 5% increase. All three of these factors are in a position that favors housing affordability. Although it may not feel that way, the long-term benefits will eventually outweigh the pain that buyers are feeling today from mortgage rates causing temporary but high monthly payments. And that'll wrap up our national updates. Now let's move on to our local market here in the Phoenix metro area. Active listings are up 18% from this time last year, so there are roughly 2,000 more available homes than there were last April. Just under 10,000 of those homes are single-family homes in Maricopa County, which is 16% higher than this time last year. However, we're still about 35% lower from pre-pandemic levels. Average price per square foot is up for the fourth consecutive month now. We're at $308 a square foot, which is up 9% year over year and 7% from January of this year. So if you're still thinking that this is the year of the housing crash, it might be time to rethink that. This graph goes back to October 2016, and it's a really great representation of home price appreciation over the last 8 years in Arizona. The drastic increase in 2021 to the first half of 2022 is very apparent, as is the correction following the April 2022 peak, and we can now clearly see the bottom of that correction was December 2022. Since then, there's been a consistent incline with some minor fluctuations, mostly due to interest rates and seasonal trends, but ultimately, we're back to where we were at the peak of the market in April 2022. Here's a quick look at days on market. This graph dates back to February 2010. The historical average is between 65 and 75 days. The unicorn years dropped down to an average of 30 days, and post-2022, we're back around that historical average mark of 65 to 75 days, of course, with normal seasonal trends tending to fall above or below that average. And here's a look at foreclosures, which is measured by the number of notices of trustee sales each month. To put things into perspective, March 2009 had 10,558 notices. March of 2020 had 388 notices. March of last year had 393, and March of this year had 194 notices. This is a strong indication that homeowners are not in distress. In fact, it's quite the opposite. This chart is national, however, it's still relevant. It shows that 67.4% of homeowners have paid off their mortgage or have at least 50% equity. And as for the remaining 33%, well, they have less than 50% equity, but they still have equity nonetheless. So all of this to say, it's unlikely that we'll be seeing an influx of inventory hit the market as a result of foreclosures anytime in the near future. So what does this mean for the future of the real estate market in Arizona? Well, according to the U.S. Census Bureau, Arizona gained just under 78,000 new residents in 2022, and an estimated 200 people moved to Arizona daily. Not to mention, we're on pace to add over 133,000 jobs by the end of 2024. More jobs equal more people, and more people equal more housing. Demand remains strong despite the high interest rates, as does our economy. So with consecutive appreciation, record low foreclosure rates, record high equity, significant population and job growth, and a healthy economy, I'll let you answer that question for yourself. And that wraps up our April 2024 market update. I'm Sydney Riebensdorf with the Reby Homes team. As always, if you have any questions or would like to see specific data in your area, please don't hesitate to reach out. We're here to help. Thanks so much for tuning in, and we'll see you next month.